afternoon and welcome to Biztech's Asian Midday Market Watch. It's the 2nd of October. My goodness, time really flies. We're in the final quarter of the year. I'm Brian Fernandez, and with me is my co-host, Jeffery Halley. Jeff, as always, great to have you also on the show.
A pleasure, Brian.
Jeff, over to you on the market summary of action this morning.
Well, Brian, there's been plenty of action in Asia today, notably in Hong Kong, where the Hang Seng Index is trading up around 6%. Yes, you read that correct, 6% today after Hong Kong returned from a public holiday yesterday. The moves in Hong Kong appear to signal further optimism about Beijing's stimulus packages. The very beleaguered Chinese property sector developers were fueling the gains today. China Bank, Logan Group and Longfor Group up over 40%, 32% and 23% respectively. China tech giants are also rallying, with Baidu and JD.com up over 10%, with Alibaba, Tencent and Xiaomi up over 5%. Markets are still closed in mainland China today, and they will be on holiday for the Golden Week break for the entire week. On Monday, China stocks rallied to their best day in 16 years after Beijing announced a raft of stimulus measures over the past week, and that included interest rate cuts, cutting the reserve requirements for banks and providing more liquidity for investors. Overall, though, Asia-Pacific markets are very mixed this morning following a poor start to the trading month on Wall Street, which saw the major indices falling amid rising Mid-East tensions, and we saw those headlines across the wires overnight. On Tuesday, new Japanese Prime Minister Shigeru Ishida took office following his election as the head of the country's ruling LDP, Liberal Democratic Party, last week. He has succeeded Prime Minister Fumio Kishida, who formally stepped down earlier in the day. Ishida's ascension could give the Bank of Japan more scope to raise interest rates further, according to some analysts, and we have seen that reflected in the price actions of the Nikkei over the last few days. Stocks in Japan fell on Monday as investors digested this news before rebounding slightly on Tuesday. And now, Brian, back to you to see how the price action is stacking up in Asia today.
Thanks for that, Jeff. Let's take a look at price action right now. The ASX on 100, ASX All Ordinaries is down 0.08%. The Kospi is down 0.66%. The Nikkei is down 1.92%, but Hang Seng is up a whopping 6.33%. Shanghai is closed for the holidays. The Straits Times Index over in Singapore is up 0.28%. Rounding up the numbers, we have the KLCI over in Malaysia, which is down 0.99%. Now, to give us some insights into markets, we have our guest today, Tina Teng, independent market analyst based in Auckland, New Zealand, to give us some insights. Tina, welcome to the show.
Hi, Brian. Hi, Jeff. Nice to see you again.
Now, nice to see you, Tina. Tina, first of all, the thing that's dominating investors is, of course, Middle East tensions, which Jeff will basically talk to you about. But I want to zoom in on China first. Now, markets in China are closed for Golden Week, but the Hang Seng is up over 6% today. Why is that the case, and is this rally sustainable?
If this rally is sustainable, there is, like, everyone want to know the answer. However, I think for the time being, it is sustainable just because this massive stimulus package announced by China. And that's like a sentiment reversal in the Chinese stock markets. Say right now, as an investment fund, just to see the opportunities that buy a bargain in China, especially stock markets usually respond to the monetary policies more than the economy itself. So that's why we see at the moment, everyone just want to buy everything in China, especially its property shares, which we can see it's gone up like nearly 30% since announced the stimulus package.
Well, Tina, let's talk about the Middle East. We saw some incredible headlines overnight following an incursion by Israel into southern Lebanon. Iran launched a gigantic ballistic missile barrage on Israel overnight. We've seen some fallout, of course, in both energy and precious metals markets. Can you talk us through what the market reactions have been to these Middle East tensions?
So obviously, the biggest impact of this attack is on the energy market, especially the crude oil prices, which has gone up 4% overnight. The main concern right now is if the retaliation response from Israel could attack the Iranians' oil plants, the facilities, that would bring out the oil output disruptions. So this intensifying geopolitical tensions are the main concern of the markets. That's been a long time since last year the Middle East conflict started in Gaza. However, I think now we can see that there are signs of escalating in these conflicts, which could spread into like a wider war or wider geopolitical tensions. Since why the oil markets could see further up pressure.
Okay, so I guess what you're saying is this really, the longevity of these moves will really relies on what Israel does next.
I think that will be relying on the response from the US and Israel. First thing, if there are further attacks on Iran on the both sides of conflicts escalated, the US might just impose further sanctions on Iranian oil exports. And later today, there will be a meeting among OPEC plus the production like a discussion about this oil output for the rest of the year. So all the tensions on the Middle East, if at the moment there will be disruptions in the Middle East oil production.
Tina, I want to just ask you your opinion, because prior to the tensions in the Middle East, we've seen significant weakening around demand. There was an increase, obviously, of inventories around the world. Is this perhaps a short-term knee-jerk reaction in terms of oil price rises, and perhaps will then, do you see then a softening of prices once these geopolitical tensions ease up?
I think that will depending on the development of the Middle East conflicts. So either there's like escalation in the war situation, or there are intensifying tensions in the US, the West, and the East. If there are any like shocking news around Middle East or between like the US or China or Russia, that certainly will be a big factor for the oil price to go up surge again. However, I think from the global economic trajectory, yes, I think that's long term. It's weakening demand for the oil, crude oil, especially fossil fuel. Like China now is in the transition into green energy and EVs, and at the same time, it's Europe is on course of energy transition too. At the same time, the US oil production has hit a record high. So in the physical markets, we can see right now oversupply is a concern. However, I think geopolitical tensions still now is overshadowing this economic softening signs. So I think at the moment is near term, there's still upside pressure in the oil markets.
Okay, thanks. Tina, let's talk about the technology stock sector that wasn't very well worded. Let's talk about that sector ex-China, where obviously we've already discussed what's driving the rallies there. Now, we saw Wall Street had a pretty soft night overnight, but actually more recently, the technology sector, the star of Wall Street, it's had some pretty mediocre price action, shall we say. Are we starting to see now the beginning of the end of this gigantic technology rally?
I think it's more the fact that there's a sector rotation in the investment funds. It seems the Fed commenced its first rate cut this year, especially it started with jumbo rate cuts. That's the like turning point or pivotal event for the global markets. So right now, I think the investment funds are seeking like the sectors more benefit from a lower interest rate investment. You can see like in this year, especially the utility sector, the real estate, they actually are performing the technology shares. I think maybe this is a time you can see some profit taking moment in the like AI stocks, technology shares, and then these funds, investment funds, rotate into other sectors and seek for the profitability.
Thanks.
Tina, thank you very much for taking your time to be on the show.
Thank you, Brian. Thank you, Jeff.
Now, we've been speaking to Tina Teng, independent markets analyst based in Auckland, New Zealand. This has been Biztech's Asian Midday Market Watch. Be informed and stay tuned every day at 1 p.m. for the latest market updates. I'm Brian Fernandez. Together with me is Jeffery Halley, my co-host. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.